Do you think you can train your brain to make more money on the stock market? Do you think it's possible that psychology is what is causing you to lose money on the stock market or to make money on the stock market? I don't know which is better for you, but hey guys, come with me into the office today and let's go and talk about how we can give you a system and how we can train your brain to make more money on the stock market or to stop losing. I don't know which way it is for you guys, but let's go and have a look at it. Let's go and see what's happening today, because I have said it over and over again. The stock market is a 50-50 game. 50% of the time when you take a trade, it's going to make you a profit. And 50% of the time when you take a trade, it's possibly going to lose, because it doesn't matter which system you use. It doesn't matter which method you use or what edge you've got. It's a 50-50 trade. There's a chance of it going up. There's a chance of it going down. But what it's all about, guys, is managing your risk and making sure that you lose less on your losses and make more on your wins. At the end of the day, trading is risky. Trading is risky. 80% of traders actually lose money. And on the lower time frames, it's been proven that 99% of traders actually lose money, which is quite a situation if you think about it. So with that, guys, just pop down to the description. I've got a free Forex book down there for you as well. Click on that, grab it. It's also on the website and the blog where you get a free trade every day. Let's go and have a look at a system, an edge, which will help you manage your risk, which will help you to train your brain to be a little bit more profitable in the stock market. Let's go, guys. Let's talk about support and resistance again. Here we are. We've got support and resistance. We've got resistance at the top here. We've got support at the bottom. But how did we get that? We're on the 4-hour chart. What we normally do is we get it from the day chart. So if you go to the day chart and you have a look on the day chart and you take it to a line chart, you're basically going to draw this resistance in where you can see clear resistance over here, and you're going to draw the support in where you can see clear support. But what has actually happened here, guys? It's broken through the support and turned this support area into what's now a resistance area. So this has now become resistance, right? So where's your support now? So now you've got to find pretty much a new support, because obviously you're going to want to trade in this area. You want to let it retest this now new resistance area, and you're going to want a new effective support area. So your next support area, if you look at this chart and you look left, you'll see over here there's a bunch of support areas here where it's bounced down. So that's what you're looking for. You're looking for that basic area where you can say, well, there's a bit of support over there, so it's probably going to come down to that support, and then it's going to change its trajectory and go the other way. Then we take it back to the bar charts. We take it back to most likely the 4-hour or the 1 hour or the 3-hour or whatever you want to trade on. It's all up to you guys. I know a lot of guys like to trade on the 5-minute charts. Guys, just remember, on the 5-minute charts, most people actually lose money. Most 99% of traders lose money if they're on the 5-minute charts. So what are you going to do with this chart is you're going to take it long from this area down at the bottom here, which is now the support, back up to the new resistance over here, or perhaps you're going to take it short from the old support area, which is now resistance. And it's as simple as that. There's no complicated situations here. But what have you got to do, guys? If you've got to look for, if you look at this, let's make it a little bit bigger so you can see it. Now, when do you take it short, for example? It comes out, it breaks through, and it gives you a clear red bar outside of this is now resistance, then you can take this trade short. But what you should actually do is wait for it to come back and retest. So it'll come back up here, it'll retest that resistance, and then it'll go down. So most likely you'll get a short trade out of this, because the best way to trade these is to wait for the retests. But you always wait for the candle to come out of the area. Once the candle comes out of the area, then you get a pretty good idea that it's going to take that direction. But you can see here it came out of the area, went back to retest, gave you another red candle, and then it went down. So most of the time it will retest the area and then go on its trajectory in whichever direction. See here, it came out, it did try to retest a little bit off, and then it went down. I would normally just keep it simple, and when it comes out of the area, for example here, comes out of the area and it closes, then I'll just take the trade and basically follow it down. Even if it does come back to retest, I'm not too concerned about it. For example, here, you could take the trade, your stop loss is up here anyway. It'll come back, retest, come back, retest, come back, retest, and then there she goes. It did go short eventually. That's normally what's going to happen. In this case, it would have failed and it would have taken out your stop loss over here. Always just keep your stop loss below the area or above the area, and then you'll be fine. It'll be okay. You can trade this on a trend line as well. So on this particular trade, if it comes down into the support, I would take a long. When it comes out, and if it comes up to the resistance again, I will take a short if it comes out. Simple as that, guys. So now that you've seen the edge, now that you've seen the system, shall we talk about brainwashing yourself, changing your mindset and your thought and the way you're going to go forward with your trading? At the end of the day, what it's all about is if you are trading and you see your trade going into a loss, many traders will jump in and add to the loss. They'll average down, as they call it, or try to hedge their bets, because that's what we do. It's a psychological thing. Because we've won a couple of times in a row, we effectively can't believe that our edge could possibly be losing, or that our system could possibly be losing. So we think it's a winning trade because we decided from the start that that's a winning trade. So no matter what the scenario, no matter what the situation, we believe that we should continue on with that trade. So no matter how much it's losing, we average down and we make our situation worse, and it carries on losing and we average down again. Now the brainwashing effect here is to turn your mindset around, because what you do when you go into profit is you tend to get out quickly because it's like a relief that you actually went into profit. And if you think about it, guys, just about every trade that you take tends to go against you before it goes for you. It's just the nature of things. In fact, you'll find that if you've chosen a stop loss and you take a trade, you probably would have been better off taking your trade from that stop loss area. It works quite often, to be quite frank, and it's quite a funny thing. So to brainwash yourself, you've got to turn your mindset around. In other words, when you're losing, you've got to think of it like when you're in a profit, and you've got to turn your brain into thinking, oh, I've got to get out of here quickly because this is quickly in here. And when it goes into profit, you've got to think, ooh, I've got to average up on this, just like you would average down on a loss. What you've got to do is brainwash yourself into switching it around. Get excited when you're in a profit, as you would get depressed when you're in a loss. Get so excited that you've got to add more. You just got to get more. You just got to add more to the trade. Put it to you this way: if there was a horse race and you were 100 meters away from the finish line, and the guys at the betting office turned around to you and said, you can double your bet right now on the horse that's in front, would you double your bet? Most likely. But you're 100 meters away from the finishing line and your horse is finishing fourth, and they say to you, you can double your bet on your horse right now, would you double your bet? Most probably not. Yet in trading, when we're losing, when we're coming fourth, and they say, do you want to double your bet before the finishing line? What do? You double your bet, because you think that somewhere down the line, doubling your bet's going to cause the other three horses in front of you to vanish. Guess what? They're not going to. The horse in front is most likely odds on to win that race. And it's the same in trading. So if it's in the front, guys, and you get the opportunity to double your bet when it's in front, not when it's down at the bottom and losing. Stop trying to hedge and stop trying to average down. That's all about just sorting your mindset out. So guys, that's this week's video. That's this week's topic. Hey, and thanks for watching. Don't forget, watch the last videos all about how to get your mindset right and how to get the psychology of trading right and how to trade support and resistance. Those videos are all out there. There's supply and demand, all of them available to you. Don't forget to watch them. Thanks for watching, guys. Till next time, cheers and bye.